Hello, and welcome to today's webinar on payroll practices, records, and outsourcing, presented by our sponsor, Heffernan. We're so happy you can join us. My name is Deb Beto, and I will be your moderator today and be monitoring questions you may have during the session. Before we open up the session, let's review a couple of key items. All of the webinar materials we discuss can be found at http://www.aspenrmg.com/heffernanwebinars.htm. I will be sharing this URL in a follow-up email, so don't feel like you need to write it down right now. If you have trouble with your internet connection during the webinar, we recommend leaving the presentation and logging back in. If you have audio difficulties or a telephone line goes dead during the call, hang up and call back again to the same number. If all lines go dead, watch the on-screen chat box for an alternative call-in number. Feel free to ask questions or provide feedback by using the chat box or question box during the webinar. If you are using a tablet, you may need to tap on the screen for the options bar to appear. Then you can select the appropriate option. We may not respond immediately, but we will work your questions or feedback into the presentation. If we can't get to your comment or question during the session, we will be online afterwards to respond, or we may follow up in an email if we run completely out of time. You may also email us at moderator@aspenrmg.com for up to 48 hours after the webinar. This will be a 1-hour presentation. Questions and comments are very much encouraged throughout, and the presenters will be answering questions at the end. And lastly, we have a number of webinars upcoming covering a variety of topics, including those listed at the Heffernan webinar website. In addition, we offer the mandatory Preventing Harassment training in English 3 times a year. With that, let's begin today's webinar, Payroll Practices, Records, and Outsourcing. I'm going to be turning the screen over to our presenter, CJ Westrick. CJ Westrick has been in human resources management for over 20 years and has worked in companies with 25 to 1,750 employees nationwide. She obtained and continues to recertify her SPHR designation, which is Senior Professional in Human Resources, since 2002. CJ started HR Jungle, an HR consulting firm, in 2006, and now works with small to mid-sized companies, providing services ranging from situational assistance to full outsourcing of the company's human resources. While CJ started her HR career in the pharmaceutical and medical device industries, as a consultant, she has gained experience and expertise in numerous industries. Thank you for joining us today, CJ. We look forward to your presentation.
Thank you so much, Deb. All right, today we are obviously talking about payroll, and our objectives are to talk about practices and policies, a little bit about payroll documentation and records, outsourcing, and I want to just remind you that you may have state laws that are slightly different or have add-ons to whatever federal law might be. And I put a few California things in here, but otherwise I've kind of stuck with the federal. So keep in mind that you may have to look up your state laws. So some of the basics that you need to always remember is the pay dates when the people get the check needs to be consistent. Usually on employment law posters, you actually have to write in what are your pay dates. Typically, they can't be moved around, adjusted. I've seen that happen where, oh, no, that's fine if we're a day late. Not really. Legally, it's not acceptable. You also want to be careful to define in a handbook or something exactly what is considered your work day, which is a 24-hour period, and your work week, which is a 7-day period. The work week is what helps you to identify whether or not someone has overtime. And so it could be, I mean, it's not uncommon to have like a Monday through Sunday as the work week, and often it's 12:01 a.m. to midnight as the work day, but I've got a few clients that have a work day that starts at like 5:30 in the morning because of the shifts they have. And always keep in mind, if you're in a company where finances might be tight, if there's ever any chance that you won't be able to meet payroll and pay it when it's due, you need to have employees stop working, or at least some of them temporarily, so that you will owe less, because it's not legally acceptable to have an employee wait for their paycheck. Even if they agree to it, it's not legally appropriate. A couple of things I've bumped into a lot as a consultant is that I've got clients who will assume that their payroll processor will let them know if they're doing something illegal, or even ill-advised. And I think most often what I have is I'll get a client and will tell me, an hourly employee, oh, I've switched this person over to salary. And when I ask why, they go, oh no, it's okay. I asked my payroll company and they said I could do it. When a payroll company responds, they are responding that their software is capable of doing that. They are not offering legal advice. So be very careful that you're getting appropriate advice, not from your payroll processor. They're only going to tell you what their software can do. And yes, it could switch someone over, but it doesn't mean you legally should have done that. And then I'm also finding a lot of clients where their accrual policies, if you've got any kind of sick pay or vacation, PTO, things like that are accruing through your payroll, usually you fill out some kind of a form when you're first entering your policy, and then they set it up. But you want to track that, and actually even at least once a quarter, you want to kind of take a look and see if it makes sense. I've had clients where it turns out they're almost accruing more sick time than they were working hours. And so you want to make sure that it makes sense and that you're seeing something that you're expecting. We're going to hop right into our first polling question, Deb.
Excellent. So our polling question is, what pay period do you use? Is it weekly, bi-weekly, semi-monthly being the 1st and the 15th and the 16th to the last, or semi-monthly with other dates, or just monthly? And please remember that you can use the questions box or chat box to ask any questions that you might have. All right, we're about 70% of the people have voted, so I'll go ahead and read the responses. 14% say weekly, 47% say bi-weekly, 34% are semi-monthly with the 1st and the 15th and the 16th through the last. 4% are semi-monthly with other dates, and then the rest are all monthly.
All right. The monthly pay periods, you might want to check on that, because a lot of states have it where an hourly employee, a non-exempt employee, must be paid twice per month instead of just monthly. And so make sure that you've got the right time period for your type of workers. And the biweekly, yes, is very common. The semi-monthly, I think the one thing I find there is that companies sometimes will try to make it semi-monthly and do a constant number for non-exempts, but a non-exempt usually isn't going to be working 86.67 hours, which is what a typical semi-monthly payroll looks like. So that means that some pay periods they might get 80 hours, others they might get 88, but you need to be paying for what the time worked it was, not just divided up monthly when it's a non-exempt. Otherwise, you're going to be constantly reconciling and correcting. And the pay period are those dates. It's like if you're biweekly, you want to be careful. I usually put in the handbook exactly what the pay period is. So if it's paid semi-monthly, I will take it the next step, and even biweekly. Biweekly, it's like you're paid, you work 2 weeks and then you're paid the following Friday. Or a semi-monthly might be you work the 1st to the 15th and you're paid on the 20th for that time. You want to be very clear about that. I am not a fan at all of having them work right up to the pay date, so that if you're doing a 1st to the 15th and then you're paying them on the 15th for that time. If it's a non-exempt person, that means you're having to go in and reconcile it after you've given it, because you're guessing whether or not they work those hours. So make sure it makes sense for what you're doing. Also, take a look at your pay stubs. It's like once they start coming out, people ignore them. A lot of employees don't even look at them, but legally you want to make sure that it covers all your bases. There's a lot of legal requirements as to what should be on a pay stub, and almost first and foremost, it needs to be easy to read. So take a look at that. And I've seen companies where I've gone in and done an audit to where they had categories in there. It was kind of like under the earnings, they had these negative amounts that were essentially what it was costing the company, and it made it very hard to read. You had to almost do your own math to figure out what the net was if you were trying to confirm it. And so make sure that's not the case. Look at your name, company name, and your address. Make sure it's completely correct. There's actually, I know of a $2 million lawsuit in California because somehow one of the words in the company's name got dropped and the city got dropped somewhere along the way. This is a company that's had the same name and been in the same location for 40 years, so nobody was looking at it until someone did, and then there was a big lawsuit. And one of the makeups for that was that they had to go back 3 years and reissue every single pay stub for every single employee, which can be very time consuming and very costly, really, when you go down and you've got, like in California, it's like 33 days to do that. So it pays to kind of do a little check once in a while, look at your accruals, look at your pay stub. You know, there are always technology glitches. You don't know what might happen, and so you just want to keep an eye on it. Looking at earnings and deductions, you need separate line items for everything. You don't want to include it all in one big batch. An employee or anyone, we'll call it an attorney, should be able to look at that and see how many hours were they paid did they work at the regular rate? What was that regular rate? How many hours of OT, overtime did they get, or sick leave? If you're using something like a piece rate or bonus or commissions, those should be additional separate lines. And the piece rate actually has to have a separate line for every different rate. So if you've got like a $25 piece rate and a $30 piece rate, each of those need their own line. You also want to make sure it very clearly identifies everything that came off that gross amount. So all of their taxes, any benefit copays, any garnishments that you're pulling, stuff like that. It isn't supposed to be a mystery when they get that pay stub. They should be able to look at that and see that it's correct. If you're doing anything pre-tax, like a benefit copay where the employee pays part of their benefit cost, you need a POP, a premium only plan in place. That gives you permission legally to use the 125 plan that the government offers you. And but without that premium only plan written authorization by an employee, you're supposed to pull those amounts off after tax. So make sure you've got the pieces in place to do it legally. When we're looking at wages, know what your state minimum wage is. And you can pay multiple wages. I've had people that don't understand that. Yes, but you need to make sure it's understood. I've got like a small wood company, I call them a wood company. They create wood things for companies. And so they've got a pay for a designer rate. They've got one that's doing the actual woodworking, and they've added one now for the project management. And so they've got one employee that's capable of earning any 3 of those rates. And it's just a matter of which hours go into which rate. Unpaid workers. Only volunteers can only be used in nonprofits. Otherwise, you should be paying minimum wage. Interns need to be part of an official college internship program. Make sure, because a lot of companies will say, oh, I've got this college student who's going to come work for me part-time, they're an intern. Well, if they're not going to get credit for it in school, they're not really going to be an intern, and you should be paying a minimum wage. Paying minimum wage on an intern is not a bad idea anyhow, because it releases you from some of the obligations you have to have interns, because an intern should actually cause the company more work than what you get out of it. And I've seen a lot of companies who use interns for what we'll call the grunt work. And if you're paying minimum wage, you can tell them to do anything you want, and you're not obligated to follow those rules and to make sure that they're getting college credit. So kind of make sure that you've got you've got it in place properly, that it's being done, because if it's a internship program through college, they've got certain requirements they will lay out, not to mention that the government has certain requirements. And so you want to make sure you're meeting them both, or you could get hit with having to go and give back pay for those interns. Overtime. All the states are anything over 40 hours in a work week. That's where that work week comes in, your 7-day period. And so it's over 40 hours in a work week. And only California has an 8-hour day also, a work day. So in California, anyone who works over 8 hours in one day must get overtime pay. And then we also have a 40-hour work week rule. So we kind of do, first you look at daily, then you look at the weekly regular hours. On the work week, when you look at overtime, there's a couple things to remember. One is only time worked counts toward overtime. So if Monday's a holiday and they work the rest of the week and maybe on Saturday, unless the worked hours are over 40, they don't get overtime for working on Saturday because they're getting their holiday pay maybe, but you don't have to. But bottom line is it's only the time worked that gets overtime. And to look at that, because a work week is a funny little animal to kind of think about. If your work week is Monday through Sunday, but somebody starts working on Wednesday and works clear till the next Friday, they may not get any overtime because the overtime on Monday starts over again. This is when you start recounting the 40 hours. So you can have some long periods of time, but I will say if the government finds out you're deliberately doing that, instead of it just being the one-off because you had things going on, they will penalize you for that. So be careful how you use that work week. It's not to be played with. It's just a way to count where your 40 hours are coming in. Paid sick leave. A lot of states are putting in paid sick leave now. So you want to make sure you're covering yourself. California, as far as I know, right now has the messiest one because we have a state sick leave policy that requires like being able to earn up to 24 hours a year. We've got right now I think the last count I heard was 29 local laws that offer different sick leave, and usually it's additional sick leave. Like in San Diego, it's 40 hours. So, and you only have to work like 2 hours in San Diego to qualify, but it's weird because the accrual rates are the same in most of the locations. It's just a matter of how much you can have available. And but federal contractors, if you have employees working on a project that's funded by the feds, it's a 56-hour minimum. So make sure that you're looking at where your employees are working and what they're doing there. And I will say, I kind of cover this more in another thing, but you want to be careful about remote employees, the ones that are working in other locations or other states. And but I do talk more about that later. Then we've got, fun little things like grace periods. We've got rounding. Rounding and has hit some lawsuits, but the courts seem to be okay with, rounding down to like the nearest 6 minutes, or rounding up or down, because they, have stated through the lawsuit decisions and stuff that in a long period of time, it does not harm the employee because they always want to make sure the employee is getting paid at least for the hours worked. So they said, like in 1 week, maybe they lose a couple of minutes, but over the long period, it's supposed to balance out. So make sure your policy is, if you start rounding at like 10 minutes and 15 minutes, you want to play with that a little bit. Maybe do some tests on old time cards and stuff like that to see, does that really benefit the employee? Because otherwise you need to bring it in a little bit tighter. Grace periods are something that kind of helps you eliminate the odd minutes of overtime because someone clocked in 2 minutes early and they were clocked out 2 minutes later. You can kind of say you can clock in earlier because let's face it, if you're actually using a time clock where people are having to put their little card in the machine, not everybody can do it at the exact same moment, like right at 8 o'clock. So the grace period says, okay, you can clock in anywhere maybe up to 10 minutes before your starting time, but you absolutely are not allowed to work during that period. Your work starts at 8 o'clock when your time officially starts. Same at the time you're leaving. A lot of people might, sit around gathering up their stuff, saying goodbye to the people they work with, whatever, and then they're late clocking out. Well, you can do the same thing on the back end. You can clock out up to 10 minutes after work, but we assume in that 10-minute period you are not working. And you need to let your supervisor know if you are actually working, you came in early to work or staying late to work, because it makes a difference and it wouldn't be clocked in correctly if you had like something like a grace period. So you want to take a look at that. Training. If you're requiring an employee to go to any kind of training, then you're going to be required to pay them for that time, and usually also for anything of the cost of the training. Mandatory company meetings. It doesn't work to say, okay, you know, everybody show up at 7:30 for a company meeting and then you'll be ready to work at 8. You're going to start paying at 7:30. So take a look at that. If they're going to school or doing something that they have chosen to do, and maybe you're doing an education reimbursement, you know, process or something like that, take a look at that. You want to be fair. If they're doing something and they take the initiative to do it, and it's a new skill, you might want to throw a little money at it. You may not be obligated to pay for their time, but maybe you'll say, it's like, okay, if you want to take a 4 o'clock class, we'll let you off an hour early to go take this class because you realize that what they're learning will benefit the company. So give that some thought as to how these pieces are all working within your organization. All right, second polling question, Deb.
Okay, here we go. Sorry, I had trouble with finding my mute button. Okay, here we go. Our second polling question. Have you checked your state laws regularly? Oh my goodness. Regarding pay. So while they're answering that question, CJ, we had just a couple of questions. So one of them will be pretty easy. Does bi-weekly mean every other week or twice a week?
It means every 2 weeks.
Okay. And one company has been told that they are okay with a 7.5-minute rounding, like a quarter of an hour. Do you see any issues with that?
I know that there was a court case recently that I think it said the 10-minute rounding. So they're rounding up to the nearest quarter hour. When you're doing that kind of rounding, I think it might be stretching a little bit. I believe there was a lawsuit, and I want to say it said 10 minutes was okay. I think a 15-minute, you know, quarter of an hour might be pushing it, but you might check and see if you can, you know, if there's any court cases for your state, just know whether or not that has hit the courts and done that. And again, you know, because a quarter of an hour is quite a bit. So you might just kind of see how that's been working out for you. Do a little research on it to see has anyone lost money over like the last 6 months? Because if they have, then you want to tighten it down.
Okay. So we've got about 80% of the people have voted now, and 64% say yes, they have checked their state laws, 8% say no, and 29% say someone else has.
Good. You know, it's like always keep in mind the laws are changing all the time. And so you always want to be, you know, have somebody looking out to make sure you don't have to do it every month or something like that, but make sure that you're finding the sources, you know, and have resources for finding out when a new law changes for your state. Sometimes it won't necessarily affect your payroll, but there are a lot of changes going on out there these days. So keep that in mind. It does pay to, you know, keep an eye on it. Bonuses. Bonuses, when it goes into the payroll system, seem to have a higher tax taken out. And so I've had a lot of clients that say it's like by the time we run it through payroll, it's almost, you know, their bonus check is so low it hardly feels like a bonus. And that can be true. But one of the things to look at is that your payroll system is set up for your pay period, like your biweekly or your semi-monthly, things like that. But it has the ability to stretch it out. I've seen as far as like a 9-week payroll period possibility. That's, I think, a little unusual, I think, but at least 6 weeks you could do. So what I would recommend there, if you really want that bonus to actually have an impact and have less tax taken out, you know, you can, for a special check, you know, talk to your payroll company. You can say this check is going to be processed based on a 6-week pay period. Because what happens is it looks at that bonus amount and it says, oh, they get this amount every biweekly or, every 2 weeks or every half month. And so it's more likely that it just threw them into a higher tax bracket. And so look and see, there's ways that you can pull that out, because bottom line is, at the end of the year, when their W-2s come out, it will adjust. If there was excess tax taken out, they will get it in a refund or applied toward the other monies they owe. If it's a lower tax amount, they will end up paying any extra at the end of the year. But since bonuses are meant to be effective, and then also, make sure that I had someone who said, wow, I hardly got any kind of bonus, but then it turned out, oh, well, she's having money put over into a savings and over into a secondary account, and then she has, this and this taken off of it. Make sure that you're pulling out those extras so that you at least get that net bonus amount to look as good as you can legally. And then that way it helps, because if you're trying to hand somebody a $500 check and it turns into $125, it just slapped, fell flat on the floor. And so kind of give that a little thought. But bonuses should always go through the payroll system. You do want it recorded through that. And also make sure whether or not, I know this sounds strange, but California has it, whether or not the bonus amount counts toward overtime calculations in your state. In California, you actually have to do this weird little bonus calculation, overtime calculation. Like if they worked overtime through the period that the bonus is paying for. So if you have a quarterly bonus, if they worked overtime anywhere in that quarter, there's a calculation you're going to have to do. So look and see. I'm pretty positive only California has something weird like that, but it doesn't hurt to check. And on call. On-call time means that you've got employees who maybe have to be close to their phone in the evenings or on weekends because you've got the kind of business where emergency calls come in or just, something comes in over that time that's not your normal business hours. So you want to give a thought about this. I've got some clients who will do a small daily rate for, like on a weekend, they'll pay $30 a day if they've got to work the weekend on call. Others will pay for a lot more than that, but you are required to pay for all the time if you're too restrictive in how you have your on-call policy set up. Usually if you give them sufficient time, like, okay, after you receive a call, you've got, or if you get a message, you've got X amount of time to do something with this. 20 minutes is going to be considered very tight. An hour, I think it'd be very easy to do that, or a half hour even maybe. So look at that. If they're at the beach and they get a call and they actually have to go like into the office or to that client site, you're going to probably have to pay for the travel time it also takes them to get there and back. So look and see what your state does, because different states might do different things. It's like it may be that you don't have to do anything extra because you have them only work a normal 7-hour day so that they're available to take that odd call, and you're kind of essentially paying them for an hour without having to do anything if they don't get any calls. But give that some thought on how that's set up. And again, if you're doing something like this is a separate line in the paycheck. You want to be able to show if you've ever paid them for something, because if you ever got a claim about something, you want to be able to say, look, here's where we paid for the on-call, here's where we paid for their travel time or whatever. And, I know it's a little extra work to add those line items, but in the end, it is protecting the company to be able to stop and look back and say, this is right there on the stub. Travel time. You could pay this at minimum wage. And I know this, you could do this anywhere because in California you can do it, and they're not very easy with letting loose with money. So what they've said though, I mean, obviously, unless it's a driver, if it's a driver and you've got somebody out there, it's, they're going to be paid drivers are paid their regular rate, but someone else that's maybe having to go to a client site or this or that, you could pay at minimum wage. The way it was defined in California was that they're not using the skills that you hired them for. They're only driving. So it's a minimum wage thing, but you don't want to adjust that without notice. Make sure they understand, here's what's going to happen. If they're driving between locations, let's say you've got someone who's got 3 stops to the day. Maybe the first stop is at the office, then they go to a client site, maybe to another site, and back to the office. Those in-between times are going to be paid in some fashion, whether it's the minimum wage or their normal wage, but it has to be paid because they're still under your orders and they're representing the company. Their commute time to and from work is not paid. If they immediately go to a client site instead of coming into the office, that might not be paid. It depends on maybe the distance and what your policy is. But often when you're sending someone off maybe to another state for a convention or a big meeting, something like that, typically their flying or driving time to that location is going to be paid time. So look at that and kind of figure that out. If you're just processing the payroll, you might not know that, but maybe look, ask around to make sure that ultimately it's coming into payroll properly, that the right times are being done. And I even, put something in like the handbooks that say, here's the way you're logging time when you're traveling outside of our time zone. Some companies will say, I want you to keep using our time zone for your time cards and things like that so that it's easier to see when they might have overtime, things like that. But take a look at that and see, what is the company policy there? And is it making its way appropriately into payroll? Commissions. Commissions absolutely went on a separate line item. If you're getting commissions because you're a sales rep, this is your lifeblood. You want to see it doesn't need to have a separate line for every single commission they receive that period, but a total line at least that is separate from whatever regular pay they might be getting. And to take a look at that, normally commissions need to be paid as soon as you have the information to do the calculation. Because even, the government's recognized that you can't just flip and hand them off a commission without getting all of your numbers in. And sometimes that will take a while. I worked inside in a pharmaceutical company, and it would take time to see how it played out because we had like this subscription to where we would be able to tell what every doctor was, every doctor that was prescribing our drugs. And then that fed out to their commissions a little bit into the, what territories it was. And so sometimes it would take 3 months before they would get paid that commission because it took that long to get the information back into the company. If you're just selling a product that you've got that's being shipped out, maybe it doesn't take more than a couple of weeks and you're just paying out the commission monthly or stuff like that. But take a look at that. In an ideal world, you always have a written commission plan. It is required in California, but it is a best practice everywhere because California put it in as a law a few years ago simply because so many arguments come when that rep, whoever's getting the commissions, I'll call it a sales rep, that sales rep terminates. Then there's an argument over whether or not they got paid the right commissions. And so save yourself a lot of heartache and put it in some writing. Here's what happens when you terminate. Here's what qualifies as earning that commission. Some companies don't want to pay that commission out until they've gotten paid. But unless you're very clear with your employees and know that that commission plan is correct, you don't know whether or not you're paying them correctly. And you're going to have to back it up and show them. So make sure, make it easy on yourself. And it makes it easier to do payroll if you know exactly when you're supposed to put that commission in there. And tips, if you're in, usually we'll talk restaurant. I'll just kind of go into restaurant or hospitality industry. A lot of tips float around there. There are actually IRS rules about tips. I remember, we'll call it in the old days, where tips weren't reported and very often, or stuff like that. But now IRS has some very specific rules about what you're supposed to do as an employer if you've got employees who get tips. And because they, according to IRS, needless to say, they all should be reported. And so look at what you've got set up. And then look and see what IRS is asking. I mean, this is kind of a real quick snapshot of what IRS wants. But take a look at that. Are you putting things together in a way so that your employees can report their tips appropriately? And are you then dealing with it? Are you showing it up on their stub? Are you doing something that works so that your bookkeeper won't get driven crazy trying to figure out how to deal with these tips for the bookkeeping side of the business? But it goes into payroll. It's supposed to go into payroll. So Figure out what you should be doing if your employees aren't recording enough tips, or how it's done, and look at that, because it can be a little tricky. I think a lot of companies don't give this a lot of thought, but make sure that you've got a process in place for this. Reporting time. Reporting time is meant to be if I'm scheduled to go to work tomorrow and I show up at 8 o'clock, but you're told, oh, sorry, something happened, we don't need you today, and I end up going home. The federal government, so if you're only under federal law, it says no pay is owed. California says, oh, no. California says you have to pay half of the scheduled hours. So if I was scheduled for an 8-hour day, I have to get 4 hours. If I was scheduled for a 4-hour day, I need to get 2 hours. But the rule in California is that person, for showing up for work, they get paid no less than 2 hours, but no more than 4. Again, federal, if you're in a state that only follows the federal rules, you don't have to pay them anything. And but keep in mind, employees don't like getting up, getting dressed, coming into work only to be told that they're not. So I think a best practice here would be to make sure that maybe somebody tries to give them a call like an hour before reporting time to say, hey, we're not going to need you today, so that they don't have to go through the effort. I think it'll help with retention a bit. Piece rate pay. This means that this was actually started, I believe, with the automotive industry. Oh, we'll fix this muffler, my employee will get paid $35 for doing a muffler, $150 for doing an engine overhaul, things like that. And they got paid just those amounts for the work that they did. Or it's also been used in manufacturing, so you get 5 cents for every one of these things that you can put through the manufacturing line. But now it's kind of been tightened up a little bit. It has been under fire legally. There's been in California, I know, several lawsuits, but it also needs to be on a pay stub where you need a separate line. So for that $35 muffler on a pay stub, it's going to say 1 at the $35 rate, or 3 at the $35 rate, or 2 at the $20 rate. So that's kind of how it needs to look on a pay stub. And I know in California, the lawsuits were about the fact that perhaps minimum wage wasn't being paid. And so you also want to look at that. Piece rate needs to still meet minimum wage rules. And then in California, we have paid rest breaks. So now they've separated out the rest break. So it's like you can do the piece rate, but then you want to kind of add at minimum wage the 10 or 20 minute rest breaks that the employee was owed for the amount of time they worked, stuff like that. So look at that carefully, make sure that it's being paid properly, that piece rates, if you're doing that it does meet minimum wage rules for the time worked, or at least make sure that you're not obligated to do that one way or the other. But the piece rate, do make sure it breaks it down on the pay stub, so that if the employee's keeping track, they can easily look at their pay stub and see that they were paid appropriately. All right, another polling question.
All right. So do you have any employees working in California? So this is just so we know who's in the audience here. And we've actually had a number of questions that have come up over the last several minutes. So I'm going to get to just a few of them here.
Okay.
How long do we need to keep the personnel file, like timesheets, vacations, sick requests, for terminated employees?
Well, I'd say it's not just the time cards, but I'd say, most of the time you're looking at 3 years. And, but, it's like, since a lot of that stuff is coming digitally now, a lot of the attorneys are saying if you can turn it into something digital, or if it keeps digital, why not save it for as long as possible? And,
okay, I'm gonna
okay.
Another one here. Is it legal to stretch the pay frequency to 9 weeks?
Not on a normal pay period. So like a bonus check you could, because it's not paying them for time worked. But on a normal pay period, there are rules about that. And so, like I said, often, monthly, I think is the longest I've ever seen. And that's typically for just exempt employees. I think it's in a lot of places that non-exempt employees, the rule is you have to pay at least twice per month.
Okay. And I'll do one more question, then we'll get to some of the others later. Is travel time paid when an employee is on call, for example, from their house to the work site?
Yes. Usually you want to include that because they are actively working from the moment they had to leave wherever they were to go to that client.
Okay. So the results of our polling questions, 80% say yes, they have several employees. 1% says yes, but only one employee, and 18% don't have any employees in California.
Okay. So I asked about California, but this isn't what I'm going to talk about. It's not just California. Make sure that you know what the states where your employees are working, what those rules are. If you have an employee, if you're like a Texas company and you've got one employee in California, you have to follow California employment laws for that employee. Whether it's the minimum wage we've got for the area they're working at, whether it's the sick time accrual, we've got a whole lot of laws in California. So, and I see this happen a lot where companies from out of state will send people in, and I get calls from those employees. It's like, I'm the only one here for my company, but is it legal to do X, X, and X? And in California, no, it's not. So you want to make sure, because I've got clients with employees in other states. Now, often we're looking at, wow, we get a break because they're in another state. But it's, the laws pertain to where that employee is working. So keep in mind that when you're moving people around, you've got to be on top of what those state laws are in addition to it. And since this is a payroll seminar, the focus is obviously the minimum wage, the paid sick leave, because there are a lot of states with paid sick leave. Things like that, take a look, and even overtime. California, because we had the 8-hour workday before overtime kicks in. So make sure that you are looking at where the employees are and that you're paying appropriately and dealing with them appropriately for anything that clicks into payroll. And because otherwise you could get claims that, hey, I was in California for 2 weeks and you didn't do this, this, or this. And so take a look at that because the laws do vary from state to state. If you've got only employees in other states that are all following federal law, then not a problem. But there are a lot of states out there that do have a few laws of their own. And so you do want to make sure that you're following the state laws as well as the federal law. So I'm only doing one slide on only in California. We have meal and rest breaks. So this is where a time card comes in very handy. You really need a time card if you've got employees in California. And so for those of you that have just a few employees over in California, listen up. We have a required at least 30-minute meal break that's unpaid, but you're going to pay 1 extra hour of something we call penalty pay if it's late, if it's not starting within the first 5 hours, which means if they have to clock out 4 hours and 59 minutes from the time they clocked in. So if it's late, if it's not at least 30 minutes, or if they skip it altogether, which is the same as being late. But bottom line is you're going to owe them 1 extra hour each day that happens. We have paid 10-minute rest breaks for every morning and afternoon period. We have something called makeup time, which is kind of this little pat on the head from California for companies because of the fact that we have an 8-hour workday, meaning that if anybody works more than 8 hours in one day, they are paid overtime. There is a makeup time option to where, let's say, I know I've got a doctor's appointment next Monday and I need 2 hours off, but I'm willing to work an extra 2 hours on Tuesday to make up that time. So if the company chooses to offer this makeup time, then I fill out a form this week saying I will work 2 hours. So I could work up to 11 hours on a day without overtime and call it makeup time, but the time off and the makeup time has to be within the same week. And it can't be last minute. It's not meant for last minute emergencies. It's meant for planned absences. Split shifts. If we have a meal break that's more than 1 hour, we have to pay for a 1 hour split shift difference. Well, and it's got a whole calculation going for that. We have alternative work weeks. Again, because we have the 8-hour workday, we have to actually jump through a lot of hoops to set up like a 4 10-hour days. And I've got several clients that do that, but the process for that is that we have to write a proposal, send it to the employees. We have to have a meeting where they do a secret ballot. At least 60% of the people need to vote for it. Then we have this waiting time to implement it, and we have to send a letter to the state saying we have implemented this. That's the only way we get a 10-hour workday without overtime. And so there's a lot of little things that you need to look at in California if you've got employees working here on a project or just representing the company here. Don't, California is tough when it comes to employment laws, and a lot of them drip into the whole payroll scenario. So really pay attention to this, because it's not an easy state to have employees. You can ask anyone who's got employees here. Okay, another polling question. Deb? Oh, I see it on the screen, but can't hear you. Either I went deaf or you're not talking, Deb. So hopefully people are putting their vote in on this. If you have a written request, have employees complete a written request for time off, and to do that.
I accidentally hung up on myself. Okay. So our polling question, you're all pretty much answered all the polling questions, but I do have one question I want to ask. Is overtime paid for 6 days in a row?
Only if it amounts to more than 40 hours, 40 regular hours. So if they're only working like a 4-hour day, the 6th day, the 7th day in California does represent overtime, even if they only worked a few hours each day up until that point.
Okay. And I'm going to hold the rest of the questions because I want to get through the rest of the webinar, and then we'll be staying on after the presentation for a few minutes to answer questions at the end. And if we don't get to your questions, we'll follow up by email. So our polling question, do you have employees provide a written request for time off? 87% say yes for all time off. 9% say yes, but only for a few things. 2% say rarely, and 2% say never.
All right. For those of you that were like on the low end of that percentages there, then I would worry a little bit if you're not requesting something, because you want to be able to always show that you did process payroll correctly. So I always like to have something in writing from the employee requesting that time off, because I have seen employees come back 3 months later that out of the blue that say, I was finally looking at my my pay stub, and it says that I took 24 hours of vacation time, but I didn't take that time off. How are you backing that up that you did it correctly without something in writing? So I would really recommend that you get something in writing that backs up any requested time off, so that you can show that the payroll records meet the requests. Because otherwise you've got a time card, hopefully, of something that shows their hours worked. So, and talking about time cards, it doesn't matter how you're tracking their time as long as you are tracking their time. Sometimes that time card is going to be your only proof in a claim that you get that they were paid properly. And so, it can be electronic, and be, the bio thumbprint thing is getting popular now. It can be the old-fashioned paper time cards, but you want it accurately, recorded. And that means that they don't round for you. I don't like those time cards that I see. It's like, 8 to 5, 8 to 5, 8 to 5, because I know those aren't going to back me up with anything if I ever had a claim. I want one that says 7:59 and left at 4:58 or whatever. And if I do rounding, I will do the rounding, but I don't want the employee to do it, because that's my backup. GPS, there's a lot of my clients are using phone apps now for timekeeping, particularly when they have staff, employees that are all over and aren't necessarily coming into the office. Keep in mind the GPS tracking on that, what it does if it has it. The best is that if you've got GPS tracking on it, that it only does a little click at the moment that they're clocking in or out, and it's not following them around all day long. There's a lot of privacy laws out there. You can put a GPS on your company vehicles, but putting it on their phone and following them all day long could be viewed as not nice, and it has ended up in court that you're edging against a lot of privacy stuff. You know, you want all your non-exempts to definitely track their time. I have a lot of clients that actually have their exempts also clocking in and out. Some of it's for job costing. In fact, a lot of it's for job costing because they want to be able to know where to apply that time for what client, because they're doing that kind of an accounting. There is a new de minimis ruling by the Supreme Court, the federal Supreme Court, and federal says that they don't count the few minutes between clocking out and actually stopping work. And because this actually started off with a California case where there was an employee, I think it was like over a period of a year and a half, he feared he was owed $103 because the time clock was at the back of the building and he had to go clock out, but he still had to walk to the front of the building to set the alarm and lock the door. So that couple of minutes that it might take him to walk out, he kept track of it. And he filed a lawsuit for it. And it ended up in the Supreme Court. And the Supreme Court said, nope, we're not going to count that because it's only, just fractions of time. However, California went back and looked at their laws, and they said, oh, you know what? It turns out we count every second. So now in California, you have to pay for that time between the fact that they clocked out and they had to make it to the front door, set the alarm or whatever. So look at what you're doing and make sure that it is being covered. Time off records, as I said, you want something that shows they're not working that day, and especially if it's a request. I don't care for holidays because obviously we're doing, if you're closed for the holiday, they didn't work, you don't need something special for that. It's only if you're giving them a benefit that they can use at will, or like sick requests. I even tell employees, if you're sick, obviously you're not always going to know that in advance. So when you come back, you fill out the time off form saying that you were sick. And to do that, so take a look at what you've got. Leave a absence request. You really do want something in writing saying, I'm going to be, whether it's for, I get guys, planning out their paternity leave out in the future, or that they know their wife's due around this time. So we have a request in place for leave of absence that the date might move a little bit, especially when we're talking delivery of a baby, but we know it's coming. And take a look at that to make sure that your records are there. I have gone into companies where there's no record of when this employee got a promotion, got a pay raise, stuff like that. And I don't like seeing that. I want to see in their file every pay change, ideally. Hold on a second. Sorry, all this talking. But, it's like ideally you've got something that goes into their employee file and a copy goes to payroll so that you've got something. You should not be making pay changes without documentation. And I've seen payroll people who have done that. Oh, Sam told me he was supposed to get a raise this week, so I went ahead and put it in. It's like, wait a minute, we didn't authorize that. Look and see what your system is. Okay, so, it's like, I like to see something, so hopefully you are doing that. When you get payroll records request, you need to comply. Sorry, it's like I got the sneezes all of a sudden. Payroll, governments you'll get subpoenas listing certain things. Keep in mind, anything from the government is always mailed. Never by email, never faxed to you. It is always in the mail. As far as I know, even state documents are always like that. So you will get, and they send it in bulk half the time. So, make sure that it looks legitimate when you get something. But, if it's just an employee asking for their, payroll records, make sure you know legally what you have to give them. Because bottom line is most employees don't ask for their records unless they're wanting to see if you've paid them correctly. So look and see what it is you have to give them and only give them that. Don't be over generous. Some states you don't have to give them copies of their time cards. If once they've turned it in, if they didn't keep a copy of their own, it becomes proprietary information for the company. And so all you're getting maybe is that little section that you see on your payroll reports, like here's how much they're paid, here's how many hours they have worked, stuff like that. Something that's more summary, not the pay period by pay period breakout. But make sure what you're legally required, and I'd say talk to an attorney if you're worried about it as to what you should give people. Payroll records, you need to keep them, per the EEOC for at least 3 years. This goes back to, and we're looking at everything from, the detailed stuff that was first putting them into payroll. Bottom line is you keep everything. If it's going toward payroll and it goes into there, I would keep everything, or at least scan it. And because even though it is only required to be kept for 3 years, if you can make it digital, there's no reason not to keep it for much longer. I mean, I have a lot of attorneys who will say, keep everything for the life of the business if you can, digitize it, because we're not really in that period of time anymore where you had boxes and boxes of payroll reports and things like that. So, talk it over with your attorney, your company, and find out what you really want to be doing there. Wage records, take a look at all of that. The wage records are, make sure that it all fits together properly. Because nowadays there's a lot, lawsuits happen all the time because it's money related. So that's where you want to make sure that you've got the payroll piece of it correct, that your calculations for overtime and straight time are correct, that you've got the appropriately itemized wage statements / pay stubs, that, and if you're only processing payroll, it probably isn't under your job description to make sure that you've got equal pay justifications, but somebody needs to be looking at that because there's federal laws, there's state laws, things like that. Make sure that the piece rates are out there, even employee schedules, to look at that, because sometimes you'll get an employee who doesn't turn in a time card and you have to pay them based on what they were scheduled to work and then clean it up later when you can confirm it. Your time cards, your wages and rates, it all kind of pulls together and looks at that. I'm going to skip this last question and move over to the outsourcing. A lot of companies outsource their payroll, and in the sense that you use someone outside who processes payroll. That's like pretty much all that company does. I'm talking like the ADPs, the Paychecks. There's a ton of them out there, and there's a lot of small ones that have entered the arena. And, frankly, a lot of them are using the same foundation software. Some of the bigger ones obviously have their own proprietary software, but I've talked to people. I actually talked to a company once where the wife was hand processing, breaking out the little booklets and writing it out by hand every week because she didn't trust the online services. I'm a big fan of the online services. This is all they do. And so it usually doesn't cost that much when you look at the time of someone doing it by hand in your company. But also take a look at making sure which companies you're using. Intuit has their own, and they have gotten better over the years, but there are some of the online ones that are the smaller combo kind of software things that maybe don't accrue the time off stuff as well as some of the other companies do. Look and see what your needs are and make sure that your payroll company is doing that, because it's like, even for accruals, I want them through payroll. I don't want to have to hand accrue stuff. And they have to legally show up on the pay stubs sometimes. So you want to kind of have that doing, and it's like, and the biggest advantage to me for having an outside company is that you can send it in yourself, you can process it online yourself, you can have them do it, or you can call it in and have somebody else do it. If you're having to do it by hand, and I've seen too many small companies that have their accountant do it, but what happens if something happens to that accountant? Suddenly you don't have payroll coming out. So it is, something to think about how it's all being done. And the cons are obviously that even though you're hiring, paying money for this outside company to do it for you, to process it all, you are ultimately responsible and held accountable by IRS. So you really want to make sure that you know what they're doing with it. Don't just ignore when you get those reports, look them over. And any method you're using really does need to be audited periodically just to make sure that it's still holding together. As I mentioned earlier, there are technical glitches that happen with everything. So you just want to make sure it didn't happen with your payroll, or that you find it and correct it right away. So overall, research your state's payroll laws. Make sure that you are following them. And then periodically review that pay stub. Make sure it has everything it should. See that your accruals are all being, done appropriately. And ideally have an employee signature for any elective deductions, whether it's the benefit elections, whether it's time off. Take a look at that, and make sure it's all, you've got something that backs up your stuff. Because if you're the payroll processor, you don't want to be held responsible for something you've done and can't back up, because that's who they're going to come to you to ask the questions, and you want to have the answers. All right. Thank you so much, and we'll stick around for a little bit for a few extra questions.
Thank you, CJ. So as CJ mentioned, it is 11 o'clock. If you do have to leave, we understand. We will follow up with your questions by email, and this presentation has been recorded, and Heffernan will make it available to you within about a week or so if you need to come back and view anything. But we did have quite a few questions, so I'm going to try to get as many as I can in about the next 7 minutes. But if I don't get your question, then we will follow up by email. So CJ, if an employee is sent home due to natural disaster, what is the company requirement for the number of hours to pay?
Actually, for a natural disaster, often you're only required to pay for the actual time worked. If it was completely out of your control, then they don't seem to hold you accountable for continuing to pay for the rest of the day.
Okay. Is it appropriate to stretch the pay period for tax purposes on a commission check?
No, I mean, because commission checks are supposed to be paying for a period of time that they earn those commissions. So typically I see commissions checks come out, like if it's a monthly one, it's like, okay, we will pay you by September 15th for the month of August, your commissions. And so that one, and if you process it through a regular one, I guess you could, but then you're paying for also an extra check being written. So keep that in mind. It's like, you really only want to stretch out the bonus one. The commission one, I mean, for a lot of people, that's their primary pay. So they don't really need it stretched out, because it's not like it's that, that's kind of the big bulk of their pay. But I would leave it as a regular pay period.
Okay. Do we have to follow the laws of the state where our remote employees are located?
Yes.
Okay. With regards to reporting time, does that need to have its own line item in the pay stub?
Recording time? Oh,
reporting time.
Reporting
so,
time.
Mm-hmm.
Not usually. Not usually. I think you just want to maybe make a note in your payroll file that, it kind of depends. It's going to show up on their time card, because usually they show up, they clocked in, and it's like they clocked out. So it doesn't need that. If you're in California and having to pay that reporting time, you could, but I don't know that it's necessary.
Okay. So this company has a policy to schedule work hours 8 a.m. to 4 p.m. For exempt and non-exempt. Is that okay?
They're only going to get, they're paying for time they don't need to be paying for, because somewhere in there, I'm assuming people are taking a meal break. And normally meal breaks are unpaid. But yeah, if they want to pay it, there's nothing against them paying it. Okay.
Is gym membership reimbursement taxable? And if it is that the same as regular earnings?
It does go through as compensation. IRS has actually pulled down a lot of things that we were used to give employees as little perks and stuff like that. But look into your IRS rules, because they're the ones that have tamped it down to where there's very little you can give an employee that doesn't or isn't, can't go through payroll or shouldn't go through payroll. They really want it to show as compensation to the employees.
Okay. And do you have any best practices for cash tip reporting?
That's, I think IRS actually covers that the employee is supposed to report each day, even put it on their time card or somewhere in their system, that they received this much in cash tip. But IRS kind of has a minimum that you're supposed to report for them if they don't report it to you.
Okay. And how do you process paid holidays on an alternative work week schedule?
It's similar to, I mean, basically, if they're working a 10-hour week and it's Monday through Thursday, then yes, a lot of times the holiday, and a lot of them are paying a 10-hour holiday. You could pay a 2-hour one, and some companies will actually divvy that up and say, we'll pay you $8 holiday, but if you want the extra 2 hours, you're going to have to come in like on day 5 or something like that.
Okay. So we're running out of time here. I want to be mindful of everybody's schedule. I'll do one more question and then we will end the presentation, and all of the materials will be posted on the Heffernan webinar website, and we will follow up with the URL by email after the presentation today. So the last question that we'll get to, is it legal to have mandatory overtime and have it all year?
Actually, it is. You can put it in there. If you're doing that, I would say make sure it's like in the job descriptions, that they're never surprised by it. It's like, nope, we definitely have mandatory overtime. And as long as you're paying it and they take the job, they can't do much about it.
Okay. Well, thank you everyone for attending today's webinar presented by Heffernan. We will send information by email with instructions on how to access a copy of the presentation on our website. And thank you, CJ Westrick, for your time and expertise today. We hope all of the attendees found today's webinar to be a valuable use of your time. Be sure to join us on October 16th for successful separations. Thank you and have a safe day.